Pricing things can be challenging, yet it is one of the most crucial tasks a firm can undertake. Finding the optimal price plan is essential for securing sales and ensuring your company's financial stability. Hello everyone, and welcome to another video. Today we'll be looking at strategies for pricing your products effectively. Yeah, you heard it right. Value-based pricing. Value-based pricing is exactly as advertised. A business employing this strategy will price its goods and services primarily based on their actual or perceived value. It often works best for custom-made products, specialized services, and handcrafted items, such as jewelry, high-end apparel, and premium booze. It can also work effectively for products that come with extras or that have become popular due to their association with prominent individuals or events. This method is the reverse of the undercut the competition approach, as it focuses on making a statement about why your product deserves a higher price. That doesn't mean you won't want to know how much your competitors are charging or where you stand in comparison. But once you're familiar with the landscape, you must understand how your product will benefit the lives of your clients, whether by assisting them in achieving their goals, saving them time and effort, or enhancing their social standing and perceived desirability. If executed correctly, value-based pricing will result in increased profitability. However, this strategy can be hard and time-consuming, so balancing the pros and downsides is essential. Competitive pricing. Competitive pricing is all about establishing a price point relative to similar products provided by other businesses, one that gives you a competitive advantage. This method is frequently employed in saturated marketplaces with well-established mass-market products, such as chewing gum, big box beer, domestic goods, and dining and cleaning services. It can also work for firms who sell a variety of products and wish to leverage the price of one item to entice buyers to purchase more items. To maintain competitive pricing, you must regularly monitor your competition. You should know when they reduce their pricing or give discounts, and you'll want to consider how to employ innovative marketing strategies to offer your items an edge, particularly when undercutting is not financially possible. If you choose this strategy, especially if your pool of competitors is vast or aggressive, you'll need a tracking system that keeps you abreast of their moves so that you can respond swiftly if necessary. Price skimming. Price skimming is the practice of inflating the price of a new product in order to capitalize on consumer demand, and then gradually dropping the price over time. It is the most effective for products that are highly anticipated, inventive, or current, and for which there is no genuine competition. Electronics and games are highly susceptible to price skimming, considering the fact that people are willing to pay a premium for the new Apple or PlayStation items while knowing that the price will soon drop or that a new version would be launched within 1 or 2 years. It involves capitalizing on fame, buzz, and scarcity. It might be an effective tactic for the appropriate product, but if it fails, it can be disastrous for your brand and sales. Before choosing price skimming as your strategy, you should determine whether your product can be rapidly and readily reproduced by competitors, and ensure that you have the utmost faith in its originality. If you're compelled to reduce the price shortly after introduction, you risk alienating customers and tarnishing your brand. Cost plus pricing. Cost plus pricing is one of the more prevalent pricing strategies, typically employed by supermarket and department stores with a large selection of common products, as well as by smaller enterprises that cannot afford to conduct extensive market research. The concept is straightforward. Determine the cost to produce a product or provide a service, and then apply a markup based on the desired profit. It is a straightforward method for determining costs and can help brands explain their charges due to its straightforward pricing structure. Cost plus pricing necessitates businesses to be wary of hidden production costs, because this method relies largely on the real cost of producing a unit. It is crucial to get this right, otherwise, your profit margin will likely be affected. Ensure that you account for items like supplies, labor, and overhead costs. If executed properly, it can be advantageous, particularly for firms seeking stability and consistency in returns. It is particularly beneficial if you have a limited budget for market research. Penetration pricing. Price penetration employs the opposite strategy as price skimming. It's when a company attempting to break into a market offers a cheap initial price to attract customers and draw them away from competition. After the product has established itself on the market and gained a following, the price can be gradually increased. It can be an excellent marketing tool for introducing the product or brand to a big audience. With online subscriptions, it is typical to receive a free month or a discount of 50% with the expectation that you'll continue to use the service after the promotional time ends. It is also utilized by taxi services like Uber and their competitors. It can be an effective method for producing big sales volumes in a short amount of time and creating a buzz as buyers flock to see what all the excitement is about. The concerns are, of course, that as soon as the trial time expires or the customer's curiosity is satisfied, they'll either revert to their usual brand or discover another cheap deal. It can also spark price wars among competitors, resulting in decreased profits for a longer period of time. So that's all from today's video. If you enjoyed it, remember to leave a like, subscribe, and ring that bell icon so that you never miss our upcoming videos. And don't forget to share your thoughts in the comments section below. Stay tuned, and we'll catch you in the next video.